The reason there's interest in Japan over the short term is because the yen weakens, and that helps the exporters. So that is kind of like this. You're starting to see it now. The second thing is that you are seeing relatively strong profits, relatively strong earnings from a lot of the Japanese companies. And the third thing that is interesting, a lot of hedge funds tell me that their small cap equities are performing really well in Japan. So there's something going on in Japan. I don't know if it's a fundamental change in the Japanese economy or in the structure of the Japanese economy, but over the short term, there are some positive signs. And also the fact of the matter is, compared to the U.S., the Japanese market is cheaper.
It's cheaper. Small caps doing better, but is that a growth story underlining there, or is that a weaker yen kind of story?
I get the sense that for the Japanese small caps, they have beaten up so much, and they are so uncovered by Wall Street analysts and by, sell-side analysts, that there are a lot of opportunities there to find jewels. And I think that's what a lot of the long-short hedge funds would tell you.
Are there still a lot of opportunities left in the U.S.? Because we saw the NASDAQ hitting record highs. It's expensive there. Yes. And we've got the political chaos going there, but that didn't seem to bother investors yesterday overnight. Yes. What's your view on how much to allocate to the U.S. at this point?
Yeah. The thing with the U.S. is you have to allocate by sector and not just plunk everything in the broader sector. The tech sector is doing well, consumer discretionary is doing well, healthcare is doing well. So those three sectors are probably going to be relatively strong going forward. But you are right, the market is a little bit expensive. And the strange thing is that market sentiment is not that positive. For us being at record highs, sentiment is surprisingly neutral, which is kind of unusual, I think. It's kind of the rally that everyone loves to hate.